As a second phase of Nigeria's exclusion from the JP Morgan government bond index draws nearer, Tosin Osunkoya, head of trading at RMB, joins me to review the trading day. Thank you so much, Tosin. It's a pleasure to have you. Well, let's start with overall market performance today, starting with the fixed income market. We've had that bulk of liquidity at the market, still swimming at the market. Any change today? Just give us a sense of how trading went today.
All right, so market is still riding on the back of the extreme liquidity at the moment. We're looking at about 700 billion in the market. That is a major chunk that would drive interest rates in the market for securities for some, near future.
Okay, so who are the bulk buyers? Who are those who are buying right now?
I reckon that the pension fund, the PFAs are still buying. They will continue to buy. Obviously, my belief is they are moving away completely from equities market, all right, into fixed income, and of course into treasury bills. Obviously, that is about the asset class that could generate some, return at the moment, and I'm happy seeing that. The only issue is the yields on those securities are beginning to go to a level where you think that they are no longer sustainable.
But do you think that, is that something you believe that they're not?
Yeah, I don't think they're sustainable, because we've seen this period before in the past, shortly after the recovery, or about the recovery of the global crisis, where yields went down as low as 1–2%. We're beginning to see some of those assets being priced, in that neighborhood. The reason why people are right now scrambling for those securities is because of the excess liquidity in the market. So if you don't have any other investment outlet out there, you will be forced to buy some of this instrument.
I mean, that's the situation, isn't it? I mean,
yeah.
PFAs, they're not exactly spot for choice at the moment.
But for the PFAs, I would expect that they begin to balance between cash placement with some of these banks, although you might not get some fantastic return on them. But I believe that you should take a position for a correction in the market, because there will be a correction. Right now, the central bank is not issuing any OMOs in the market at the moment. So that explains why a lot of people are scrambling for short-term bills and for bonds. But at the level below the inflation rate, it's a very dicey situation, because what you have is a negative return, okay?
Sure.
And you know that it's not sustainable. And I don't expect there to be any reversal in the trend of inflation at this moment, because right now it's been gradually moving up.
And indicators still point to
exactly.
a potential further rise. Now, you know that I'm on the second phase of the JP Morgan government bond, the listing of Nigeria's government bond from JP Morgan, which the monetary authorities have dismissed. I mean, we're looking at the second phase. Should we expect any impact, or is this something the market has fully absorbed and we've just all moved on from it?
I think it was. We played a lot of. How would I put it now? The noise around it was just too much. All right, and we gave them too many kudos. That's okay. We would see a negative reaction. Whereas what happened in the market, it created an opportunity for some people to begin to buy.
Because of the way our market, in fact, can we say it's because of the way our market is structured? If it were weren't structured that way, we would be saying a different story.
Yeah, you could argue that because of the way our market was structured and the fact that we underplay the strength of the pension fund in this market. Okay, so they came out to support this market. And they actually gave a good account of that support, which I am totally happy about. And that had underplayed the fact that, yes, we could see another hike. I don't think we're going to see another hike.
Okay, all right.
Yeah.
Okay, we're going to have to leave it there. Thank you so much, Tosin, for stopping by, giving us an update on market trading today.
You're welcome.